Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is Stock Trade Ideas for the week of October 13th, 2014. Today is Sunday, October 12th. Hope everyone's having a great weekend. We're going to take a look at 6 stock trade ideas, one of which we got out of last week. So we're going to review that, and then we got a bonus deal for you. I'm going to look at the market and the specific candlestick that the market did on Friday. Okay, we're going to start off here with Facebook. So we got into Facebook on the 7th, which was Tuesday, and we exited on Friday when it hit our initial target. I actually got out of partial at first, and then it bounced up pretty good. And then when it came back down again, I probably should have held. 2020 hindsight. We'll see. We'll find out tomorrow. Tomorrow and Tuesday will tell me whether 2020 hindsight should have held or not, but I didn't. We grabbed all the profit on it. And the reason I did is because the 21 was still above the 55 up here. Now the 10 is breaking below it. I looked at it and I thought, there's a decent chance that Facebook may just snap back up here. And if it gets back up and trades slightly above the 10 again, I'm going to probably be looking to buy puts on it again. So we'll have to just watch and see where it, what it does. Now, I have a really strong suspicion the market's going to continue down tomorrow and maybe even Tuesday and Wednesday. We'll see. But given that, I thought, well, when you look at Facebook, if it continues down here, and it did close below this low here, the low is 73.07, and it closed at 72.91. So it looks like it's closing below potential support. The next support I saw was a minor support in here at around 71.5. And then the next major support I see is down about around 68. Actually, just slightly above 68, but 68 is close enough. So, so those are the 2 thresholds. If you're still in, if you're still looking at, potential support. Anyway, so those are my thoughts on Facebook. And by the way, we exited Facebook. We were in for 4 trading days, up 55%. I will never complain about that. Okay, the next one is Adobe. We're going to take a look at that. We got in again on Tuesday the 7th. And the details of all of these trade ideas are on the Trade Ideas webpage on the website. And if you're not a subscriber, first name and email to subscribe. The forms are, after the posts and on the website, so it's very easy to do. All right, so we got in here, and this looked like it was breaking down. Looked like we had a little swing move coming. Clearly, this has been dropping. Looks to me like we've got a double top in here, and the double top target, based on the height of the top to the valley in between, projects down to here, 61. And when I look at support, as I backed off in here, I looked at support down in these 2 areas where I drew lines for potential support. So we'll see. We got out a half at the initial target down here and still holding half of the position. So had 72% profit on the first half, 3 trading days, and still holding the other half. So this is looking very promising right now. And I tell you, the market closed near its lows on Friday for the week. So did a whole lot of stocks, which is why I'm a little bit wary about even having something to try to jump in on first thing tomorrow morning. That's a new trade idea. Let's take a look at Pandora, which is the other one we've got an existing position on. Excuse me. We got in again on Tuesday, the 7th. And exited half at the initial target right in here. And now it's continued back down here. It's broken where I thought we had, potential prior support coming in at these lows back over here at the end of April, end of May. The other thing I want to look at here's the other support down here, a 17.5 to 18. And where is that coming from? That's coming from where previous support came in back down here. I didn't see, when you break below this low, there's no major support that came in, exhibited itself until you get down into this area. So we're talking 17.5, 18. Now the other aspect of that is when I look at this, this is the corrective wave construction. Looks like to me, it looks like we're doing some kind of complex WXY, because it looks like we had an ABC in here. Then we get this X. And the thing that helps me a little bit with that was when I see a triangle like this, you know, this three-wave construction, 1, 2, 3, 4, 5, little E that goes partially and then rolls over. Triangles from the Elliott wave theory are usually in either B waves or fourth waves of impulse moves. Okay, so I had to assume that this is some kind of B wave. If that's the case, then this is an A wave here. And now we're looking to see, well, where is C? How does C project? When I look at the length of the A, come back to the end of B right back in here, well, it's already past where it would be equal to A. The next, you know, extension down in here, 161.8%, is pretty doggone close to where support is. So I think there's a real good chance that that's the kind of target we're looking at. We'll have to see. Right now, I'm just looking to try to ride this on down as much as it'll go. We'll just see what the market will give us. So that's my thoughts on Pandora, Adobe. Okay, now the couple we're watching in here, Green Mountain Coffee Roasters, Keurig Green Mountain. I talked about yesterday, so I won't spend any time. It was one of the consumer-related stocks that I reviewed yesterday. And so I am watching to look for this to break down. The next one is Twitter. Twitter is also, it's interesting. We're getting some divergence in here between this point, and but the only thing is it looks a little bit bullish to me in the move that it's acting, but I have a real hard time taking, you know, call positions or bullish positions right now with the way the market's acting. So now we got this big breakdown on Friday, and it's a pretty good sized bar, okay? And it's the largest bar in terms of high to low trading range for the day of, I don't know, it's even larger than this one, I believe. High to low here was about 4.4, and high to low here is 5.36. So bigger than this. So the longest one in weeks. The biggest one in weeks. It may be all the way back to here, so even months. So whenever I see a big bar like that, a lot of times it's consumed, you know, most of the move. Not all the time, but also the other aspect is that the 21 is still somewhat rising and above the 55. The 55 just broke above the 233. So the moving averages are somewhat bullishly aligned. So I'm cautious about puts on this. But I do think that if this is in a bullish low mode here, that the fourth wave may be back down in here somewhere. Okay, the bottom of the fourth wave. So I'm just kind of watching and seeing what develops on this. Now, if the 10 breaks below the 21, then I'm going to get a little bit more interested and we'll watch to see what develops. So it's on my radar screen, kind of watching it. So, you know, very liquid stock and options. You know, heavily traded. And then the last one is Yahoo. Yahoo is a similar type thing. I'm really interested in this. The 10 is below the 21. We got this breakdown here, but because the 21 is above the 55 and the 55 is above the 233, so again, they're aligned, you know, long-term and intermediate are to the upside. I need to see another close down below here and see how this stock acts. So I'm just watching and not willing to take a position. And besides, I got a feeling that if you try to take a position tomorrow, it's going to be interesting to see what the opening's like on the market. You know, anything like you try to buy puts tomorrow at the opening, etc. The prices on puts are going to be very inflated. They're going to spike them, especially if the market opens down, that type of thing. So, you know, right now I'm just going to be watching this, not saying, you know, this is not to take a position at tomorrow. So those are my radar screen: Twitter, Yahoo, Green Mountain Coffee Roasters. Okay, now I'm going to take just a minute to look at, or 2 minutes maybe, to look at the market, review the market. Look at this bar in here, the way it closed. This is what you call an inverted hammer, okay? and it's a little clearer even on the Dow Industrials, an inverted hammer. Now, sometimes people think hammers are bullish, but an inverted hammer can even be bullish sometimes, and I wasn't really sure about it, so I thought, well, let me go check it out. And there's this guy, let me go to this guy's webpage, okay? Thepatternsight.com. Tom Bukowski, he has done a ton of research on all of these patterns, and he's done analysis, and he's I can't remember his background. I looked at it years ago, but I think he came out of the aerospace industry. I think he had a really good background, analytical type background, and he did a lot of analysis on this stuff. So anyway, when I checked into the inverted hammer, I thought it was really interesting what he said here. Years ago, when I started learning about candlesticks, I already knew about the hammer, but the inverted hammer escaped my attention. I thought it was a hammer upside down, but it's not. A hammer is a single candle line in a downtrend, but an inverted hammer is a two-line candle, also in a downtrend. The inverted hammer is supposed to be a bullish reversal candlestick, but it really acts as a bearish continuation 65% of the time. The overall performance ranks at number 6 out of 103 candles, meaning the trend after the candle often results in a good sized move. So here's his little diagram, okay? And let's go back to, this is picture perfect of what he just showed as a diagram. So what he's saying is there is a 65% chance that we're going to get a continued move to the downside, and oftentimes it's a substantial move. So just kind of reinforces, I think, the perspective I've got on the market right now, and also with some of the things, a lot of what we're seeing in the stocks. So, all right, that's it for today. That's it with stock trade ideas, and we'll be back tomorrow night with the market update, see how Monday shook out, and we'll kind of go from there. So everyone have a great Monday.